Well, do I want to start with that? Okay, so the first question that I got was, do I have any recommendations as far as risk management? I mean, I keep pushing Magic Keys. I'm gonna keep pushing Magic Keys. Go get Magic Keys. You can get the digital version or the physical version. I recommend the digital because you don't gotta wait, but it's just up to you. Magic Keys is kind of like self-explanatory. Once you get it going, you don't have to think about risk management. Like I just push that. I use my account in the fixed lot size. I don't do percentages with the Maya account. Okay, so when you be seeing, when I be showing my trades on Instagram, I'm doing the fixed lot size as far as risk in my account. Okay, so just wanted to say that. I had some questions. People wanted to see the low probability setups. I'm going to show that today. I had this one guy send me a chart, and he was, well, I don't really understand what was the question. Let me look at his question real quick. Below. Do I wait to fill in the gap, or is it good enough? Or is the wick good enough? So I'm going to go through that setup that he sent me today. And I got two questions about market structure. I guess I got to go through that over again about major and minor structures, because I guess people getting the trend wrong. So we got to go through that as well. And yeah, I'm just going to show y'all the difference between low probability and high probability setups. I mean, we kind of talking about the same thing, but as new people keep coming in, we got to keep going over the same type of stuff. Far as the homework, the only thing was some people was just giving me low probability charts. Like it wasn't the high probability setup. So other than that, like people was getting the homework right. If you got your homework wrong, you can just message me. I ain't gonna put you on blast, bro. I'm not gonna put you on blast while everybody on here, bro. We good, bro. So if you had any questions on the homework, you can just message me here, bro. Okay, I'm not gonna put nobody on blast. But let's get into this stuff, though. Let's get into this stuff. So yeah. All right. So this right here, we're gonna be talking about the overall trend on the 1 hour chart, and then just taking the setup on the 5 minute. Now, how I determine the trend, I go to the 1 hour chart. I just like the 1 hour chart. I can go on the 4 hour, but mainly I look at the 1 hour, okay? Because I take my entries off the 5 minute. Now, when it comes to determining the trend, first of all, you gotta know market structure. That's key, bro. Like if you don't know market structure, you're doomed for trying to determine a trend. At the end of the day, I'm not trying to have a bias every single day, but I have to know what is the structure being broken. Are we making lower lows or are we making higher highs? That's important far as determining the trend. Now, if you look at this, if you just look at this looked like a downtrend, no cap. Like we breaking structure to the downside, we're making lower lows, lower highs, lower lows. And then we get down here. As we get down here, what is going on? We're not breaking no lows. We're just making higher highs. We're breaking structure we're breaking this structure right here. Let me circle it. We're breaking this structure. This low never got taken out. We made a whole new high. It never took out that low. Then we made another high. So with that being said, when I see stuff like this, the trend may be reversing. Okay. Now, does that mean this is just completely an uptrend? No, but you have to understand that minor trends, like short-term trends, are going to happen even on a downtrend. So I'm not going to just completely say, okay, we're on an uptrend now. No, bro, no. For me to say that this is an uptrend, we need to break this. We need to break this major swing high. If we break that, I'm going to, in my mind, we're uptrending now. But as of right now, we may be on a short-term uptrend, although this looked like a major downtrend, okay? Like you look at that, it's just like a major downtrend. Now, let me take this off. Okay, take this off. Now, again, I have to see my setup on a 5-minute chart, but I'm going to mark up the 1 hour setup. So we got a 1 hour demand down here and we got a 1 hour demand down here, okay? Do we know it's going to hold? No, we do not, bro. We do not know it's going to hold. But again, my mind right now, I'm not set on this being a overall uptrend. I'm still bearish, but I still have to see my setup. So let's go to the 5-minute chart. Let's go to the 5-minute chart, because I'm looking at the 1 hour chart, but I have to see my setup on a 5-minute. I got to keep repeating that because some people be like, okay, like this is like an uptrend, but are you seeing your demand setup on a 5-minute? Because if you're not, then why are you even trading? You know what I'm saying? So right here, let me fast forward to the time that we wake up. Okay. Okay. So if I'm looking at this, and remember, we're still on a downtrend and on the overall higher time frame. On the 1 hour, we're on a downtrend. So I'm not going to take no buys unless we tap into some type of 1 hour demand zone. Other than that, I'm not taking no buys, bro, because I still think that we're on the downtrend and we never broke that swing high on the 1 hour chart that I was talking about. This one right here. We never broke that. If we break that, then structure is being broken to the upside. So let's fast forward. Okay, now we got to break a structure on the 5 minute. Okay, now it's dropping. Fast forward. Like it's just dropping. Broke some more structure. That's a supply setup right there. Now, okay, now on the 5 minute, this looked like a downtrend on the 5 minute. And on the 1 hour, this is also dropping. So I can't just say that this is going to be an uptrend yet. I can't say that, but we're still bearish until it touched one of these zones. If it touched one of these zones and we start breaking structure on the 5 minute going up, then I would take some type of buy setup. But other than that, I'm still bearish because the 1 hour still look bearish. Like we haven't broke no major structure. So let's go back to the 5 minute. And I mean, that's clearly a setup right there. If you can't see it, that's something that we should take right there. And if we take this setup, then we should be aiming for these gaps that's over here. Some type of gaps is over here, but this is obviously the 1 hour demand. So let's fast forward. Is that another setup? Hold on. That is another setup right there. So let's fast forward because we still never tapped into that 1 hour demand right here. Okay, now when it comes to trading the 1 hour chart and you're trying to take entries off the 5 minute, you can either do two things: wait for a 5 minute sell to occur or make the box smaller. Me personally, I like to wait for an ID, a replica of the 1 hour setup. So let's go back to the 1 hour. Let's take these little EMAs off. We are at the 1 hour demand. We're at the 1 hour demand, but I want to see the same thing on the 5 minute chart, especially if I see a break of structure on the 5 minute chart. That's just giving me more indication to take the trade. So I'm just going to fast forward. Fast forward. Okay. Okay. Now, what just happened right here? What just happened right here? Now, this trade right here, this one is a little bit more riskier because we never had a break of structure. This is just a demand with no break of structure. But this one over here, this one is more ideal in my opinion. This one is more ideal in my opinion. Because why? We have a break of structure with that. So since we broke this high and it came back, I will be taking that buy. How can you tell the difference though of a major structure area? What do you mean by major structure area? A major structure is only the higher time frame. Is the higher time frame swings. Like okay, if you don't understand like swing lows and swing highs, like that is the peaks, if that makes sense. So let's go to the line chart. If we look at the line chart, I always talk about this. Like if you don't understand structure, go to the line chart. This is a major peak right here. This is a major low. It never broke that high. So we're still bearish, but it never broke this low. So we could be bullish, but we need something that's major to be broken, if that makes sense. Because there's structures all within every, like, let me go to the 5 minute. This looked like a downtrend, but this can also be an uptrend on the higher time frame. So it all depends on what time frame you're entering on and what is the higher time frame up looking like. So if you're doing the same thing on a 1 hour chart and you see that it's on a downtrend, but the 4 hour or the daily may be on the uptrend, understand where you're at in the market. You know what I'm saying? And understand your entry time frame, if that makes sense. You know what I'm saying? Why don't you consider that demand above that? What demand? Which one are you talking about? No, ain't nothing wrong with this one. This one, if you're talking about this one right here, is nothing wrong with this one. You can very much take this one. But I'm saying, look at what's going on the 5 minute. This is coming from a downtrend. When I try to catch reversals, this is a reversal because we're on a 5 minute chart. When I catch a reversal, I would like a break of structure. It's dangerous to try to catch the bottom of a downtrend because we don't know if that's the bottom. That's the thing. We don't know if that's the bottom. Say if price moving from 1 hour supply or supply or demand, will you go to the smaller time frame and look for a setup, or you will wait for a price to come back to the area? Okay, so if it's a 1 hour supply, it's only two things you can do if you see a higher time frame setup happening. You can either scale down the time frame to make your zone smaller, or wait until you see another identical setup just like the 1 hour. Those are the only two options you can do. That's it. Like, you see a 15-minute setup, you can scale down to the 5. You see a 1 hour setup, you can scale down to the 5. Or you can see a 1 hour setup and just wait for another whole setup to happen on the 5 minute, because they're going to happen, because this is a 1 hour setup right here. The 5 minute demand broke the previous lower high though, then reverse. What do you mean? The 5 minute demand broke the previous lower high. It's only, I mean, I see two of them right here. Like, this is the first one. This is the first one that literally tapped the zone and it went up. But then this is the one that had a break of structure. This one had a break of structure, but then it dropped lower. I'll go back to the 1 hour. This one never got tapped into. You have to be prepared for both. You only focus on the 1 hour for structure and 5 minutes for entries. I look at the 4 hour too. Yes, I look at the 4 hour, but I'm mainly far as like trying to identify the trend. I look at the 1 hour for sure. The 1 hour time frame, that's what I look for as far as determining the trend. Can you show what is considered a break of structure? I got a whole webinar on that. I ain't gonna cap it. I mean, we can go through that just real quick, because I don't want to waste somebody's time, especially people that we be going over the same stuff. But a break of structure is all it is. Now with me, I look at the wicks. If it wick above and attach into my zone, that's a break of structure, in my opinion. Some people do it by the close of the candle. I don't. So a break of structure, all it is making a new high. So this right here, I'm gonna put an arrow on it. Where is the arrow? Okay. So this swing high right there, when it broke above with that wick right there, let me put the arrow right there, that wick right there, and it came back into demand, that's a break of structure. That's a break of structure. Just like the same thing as far as this, they did it right back to back. Where is, okay. The same thing with this setup. I mean, that's not a setup. I'm just saying, like, this is a break of structure. This green candle closed above and wicked above that high, then came back and made a lower high. It never broke this low. You feel what I'm saying? I got a whole video on market structure on YouTube for free. You can literally watch it. You can understand higher lows, higher highs. The market literally have to move like this. And then once they do that, now we're going to downtrend. And then go up, now we're going to uptrend. That's literally how the market moves. It literally moves in waves just like that. Okay. But I don't want to keep talking about market structure because I got a whole webinar about the break of structure. You can literally watch that one. Okay. So this is a 1 hour demand, and you can either, again, make your zone smaller, one, or you can wait for another setup to occur. And that literally what happened. This is a 5 minute demand, and that took off. And then this one has a break of structure, which this is more ideal right here. This one is the more ideal one when you have a 1 hour setup, tap into the zone, and you see a 5 minute break of structure. And then it's the same thing as the 1 hour. Let me, okay, so what example is this? This is NZDJPY. Okay, so let's fast forward because this is not even the time that we trade. So you could have took this sale all the way up into that demand, got out, and then wait for another break of structure. No, I don't talk about structure in the course. No, I don't talk about structure because I was showing it on YouTube for free. I mean, market structure is kind of like, that's kind of like the basic beginner stuff. Like if you don't really understand that, That's why I didn't put it in the course, because that's like beginner stuff. You should know what market structure is. Not gonna cap. Okay, so let me fast forward to the very next day. Fast forward. Okay, now let's go back to the 1 hour. Let's go back to the 1 hour. Now, let's just look at this, bro, because I'm trying to understand structure. Let's go back to the line chart. Now, remember, we still think this is a downtrend, but we're at this very moment right here, we're not breaking lows. We're making higher highs, and then it come back to demand, and it's holding on demand. So this could potentially be an uptrend now. Now, since we already tapped into that 1 hour demand, then the very next day, I'm looking for some type of buys. I'm not gonna lie, because when you see that the higher time frame already bounced off of a supply and demand, most likely they're gonna do the same thing on a lower time frame. So this right here, I mean, they're going to set up right there just alone. You could have won on, but let's just fast forward and see if we can get one that's even more cleaner than that. But remember, they already tapped into a 1 hour demand. So I kind of have a bias for the day. And then let's just look at the EMAs, what the EMA is looking like. Okay, this is looking kind of ugly right here. Fast forward. Okay. Take this off. Okay, here go a demand right here. It's a demand right there. And we have one right there. I mean, you could have took, but basically all I'm doing is just basing everything off of the 1 hour chart. The 1 hour chart already tapped into a demand, and then we're just gonna just wait until we see another setup happen on the 5-minute chart. And then the rest was history after that. But that's kind of how I determine the trend. I'm not gonna lie, like I don't try to just come to the market super biased, but I gotta know what the market structure is doing on the 1 hour chart. That's really all I'm doing. I'm not gonna overcomplicate it. And again, if I don't see my setup on a 5-minute chart, I just won't be taking no trades. I do look at the 4 hour. But the 4 hour, it depends, because if the 4 hours at a supply or demand, then I got to scale down to the 1 hour, see if it's a zone or not. But either way it go, I'm still basing the trend on the 1 hour, because I'm taking my inches off the 5-minute, if that makes sense. But I glance at the 4 hour, but the 1 hour is really what I look at. I'm not gonna lie. Do you enter off of the Ingolf or right at the supply zone? As far as getting in aggressive in the supply and demand zone, that's kind of up to you. I like to break of the candle, but sometimes you need to get in aggressive because the candles be so big, you missing pips by getting in on the break of the candle. So it just really depends on the situation. Honestly, it really just depends on what candlesticks they're giving you at your zone, because sometimes they could be real small dojis. Those be the good ones. When they be having like the little small candles slowing down at your zone, those are the ones that I like. But when it be them big ass candles and it be like 10 pip candles touching your zone, it's like, damn, bro, like I gotta have a 10 pip stop loss because this candle was so big when it break. So it's just really just kind of like what you're more comfortable with. It's pros and cons to both. Breaking the candle and getting in aggressive. It's pros and cons to both. So we looking at the 1 hour chart for supply and demand zones and breaker structure. Yes, and structure too. Structure, not just breaker structure, but just look at the entire structure of the market. What have they done? Which EMA do you use? This is the 13 EMA, this the 200 EMA, and the 50 SMA. That's about it. Do you sometimes take 15-minute setups? I mean, you can. Don't get me wrong. The 15 minutes on supply and demand setups, they hit too, but I'm kind of like in and out of the market. I don't really like waiting too long, but it's the same thing on a 5-minute. It's literally the same thing. So, yeah, I'm gonna get this off. But does this make sense though? Before I get to the next thing, does this make sense? Because some people have different ways of following a trend. It'd be different. People have their own techniques on how they follow the trend or try to be in line with the higher time frame. That's how I look at it. I'm not gonna lie. Okay. All right. So I'm gonna take this off. And I have another example of USD CAD. Okay, so let's go to the 1 hour chart. Oh, let's see, no, not that one. Right here. Okay. So right here, You said, wait, hold up on what? What are you gonna do if there's no 1 hour supply and demand? You gotta base everything off the 5 minute or no trade. If you're one of those traders that you need 1 hour, you need the 1 hour to be in line, understand you're not gonna trade every single day. Because if we on a 5 minute seeing setups, the higher time frame is their setups are way slower. They're more powerful, but they're slower. So if you wait on the 1 hour every single time, you're just not gonna be trading, bro. You feel me? And it be setups that we're taking on a 5 minute that have no confluence with the 1 hour. So it just, you feel me? I hope that makes sense. But okay, so let's get into this right here. So now let's zoom out. Now we zoom out right now. I'm just gonna put a whole arrow from the top to the bottom. This look like uptrend. Now I don't use trend lines, but we're just going, well, this is not really a trend line. I just want to show y'all the trend that it looks like. This looked like an uptrend, no cap. No cap. But if we go to the recent day right here, what do we get? On the 1 hour, we got a break of structure. We have a break of structure, okay? Now, situations like this, we will be expecting for it to tap into our zone. But again, we trade New York session. So by the time we see this, it's going to be down here in this gray shaded area. So we will understand that it didn't tap into our zone. But looking at the structure on the 1 hour chart, let's go to the line chart. Let's go to the line chart. Let me make this a different color so this can pop a little bit more. Okay, yeah, something like that. Okay, so if you're looking at this, we have a low, we got a high, and then we have a break of structure right here. Then we have a lower high, and then another break of structure. When I see stuff like that, this can be a new trend starting right here. So when I come into the market on this day, on this very day, and I look at the 1 hour chart, I have a sale bias, but I have to see my setup. And what makes the setup even more better if I see a break of structure on the 5 minute, because we got a break of structure on the 1 hour. Feel what I'm saying? So let me go to the candlesticks and let's go straight into that day. And let's see if we see some type of setup right here. Okay, so we got a little consolidation right here. We got a break of structure, come back, another break of structure, and then we get a setup right here. The setup is literally right there. It's a high probability setup right there. Break of the candle, boom, and we already going with the trend on the higher time frame. So that's really all I'm doing. You know what I'm saying? I'm seeing what structure is being broken on a higher time frame. What do? Did they grab liquidity on a higher time frame? But mainly, I'm really speaking for the 1 hour chart because again, I take my entries off the 5 minute. So if I see that we're breaking structure to the downside on the 1 hour, I'm going to go to the 5 minute chart and see if I see the same thing on my entry time frame, which is the 5 minute. And that's really it. Like, that's really it. I'm gonna keep it super simple. And then I'm gonna look at my EMAs. Okay, what the EMAs? Okay, we got 200 at the top, everything lining up, take the sale. Don't think about it. That's literally it. I gotta keep it simple. So when you get to overcomplicating, okay, what the 4 hour doing, what the daily is doing, you overanalyzing, bro. You're literally overanalyzing. Okay. But yeah, I hope that makes sense as far as me seeing the trend, okay? I don't base everything off the EMAs. I'm not, indicators, they lag, bro. But that's just something that can give me a little bit extra confidence when I put the EMAs on. I'll take them off, but I'm mainly looking at the 1 hour for sure. As soon as I've seen that break of structure, okay, we good to go. Let's take that, and then let's look left to see if we got some gaps. Over here, we got a gap right there. That's more confluence to take that sale and to hold too. So, hope that makes sense as well. Am I recording? I hope I'm recording. Okay, I'm recording. I was gonna be mad if I wasn't recording. Okay. So let's go to my man's that had a question. Let me go to it real quick because I kind of forgot what you said. Okay, had a setup on Wednesday, USD JPY. I was waiting for candles to fill gap, but it wicked instead of went down before I could get in. Do I wait for the candle to fully fill in the gap? It did fill in the gap. It did fill in the gap. So let me go back to it. So this is the setup. I'm guessing this is the setup right here. Once it touched into your zone, bro, you should have bought literally right here, bro, without a question. This is where you should have bought right here. Like literally right here, bro. For my mans that sent me this, that's where you should have bought. It literally tapped into your zone. You should have bought literally right there. And you got gaps above too. That could have been targets. Target could have been right here or above here, anywhere. But yeah, that was literally it. If you was confused on that, like this is just a regular setup that we take. But stuff like this, let me take this off. When we already, what was he asking? No, I don't use fibs for confirmation. No. This is what I'm about to say as far as a breaker structure right here. This is a breaker structure, and this is also a breaker structure. I talked about this on previous webinars, but you got to understand when the trend have already ran. Why would I take a supply right here when we already been pushing down for so long? You got to understand that trends end, they don't go on forever. So if I'm taking a supply right here, let's do this right here. If I'm taking a supply literally right here, and then we just tap into a demand down here, I would rather take the demand because we already been trending for a while. You want to be, when you take the supply and demand setup, I like when we are at the top far as the supply and at the bottom far as at the demand. When you already been trending, that's dangerous, bro. That can be very dangerous. It's been falling for too long. It's time to correct. It's not going to keep dropping. How you know it's not going to fall down even more? I mean, well, one, for a breaker structure, and if this zone right here, I don't know if it is, but say if this zone was like a 4 hour or a 1 hour demand, that's even more confirmation. That's even more confirmation. But I don't think this setup even have a higher time frame demand right here. Or the breaker structure is literally right there. That's why I say you gotta put the line charts on. These both have a breaker structure. This one, this right here, those swing highs got broken, and then this swing low got broken. But we already been trending down for so long, it could be a reversal. That's why he said you gotta understand market structure, bro. You have to understand market structure. If you don't, it's gonna be tough for you to identify when the trend is changing. Like, okay, we at a low, now we didn't break that low. Okay, now we're shooting up, now we're breaking structure to the upside. It's bullish now. You know what I'm saying? But yeah, I would be very careful about taking supply setups when we've been dropping for so long. Like stuff like that is very dangerous. I would consider the supply zone as the high to need to be broken. You talking about, yeah, right here? Talking about right here, bro? I think that's what you're talking about. Yeah. Do you have any tips on how not to overanalyze? Sometimes I'll take the analysis too far. I didn't take any trade because I am certain about everything. Keep it simple, man. Like, it depends on what time frame you're comfortable with. Some people don't like the 5 minute. It can be a little too fast, bro. So sometimes people trade the 15 minute. But all you really need to do is just look at 3 time frames. You don't even need to look at no more than that. You don't have to look at the daily. You don't have to look at the 4 hour. You can literally look at 5 minute, 15, 1 hour. You can look at 5 minute, 1 hour. If you swing trader, you can look at 1 hour, 4 hour. Like, it's a lot of ways to view the market because supply and demand is so universal. It doesn't matter what time frame you're on. It's going to happen. Now, the lower the time frame, the more steps you see. That's why I kind of stay away from the 1 minute chart. Chrissy, she's on her own with that. I'm not gonna lie, Chrissy, she just loved the 1 minute chart. I can't do the 1 minute chart. It's just too noisy, man. And you're gonna lose more. You're gonna get a high RR, but you're gonna lose a couple of times before you get that 1 to 10, 1 to 7 RR. So it just really depends on your entry time frame, and you don't gotta overanalyze the trend, bro. Just wait until you see your setup on your time frame. Okay. Yeah, definitely make a checklist. Trust Confluence and higher time frame candlesticks form. Fact. Looking too many time frames will mess you up. Trying to tell you, man. When you see this breaking structure on UJ, then you're not looking for supplies. I'm looking for demands because we already dropped and we got hella gaps sitting above. We are like, if I'm taking a supply down here, you're selling low. You're selling low. We need to be selling somewhere up in here, bro. We don't need to be selling when the trend have been dropping for so long. It's like catching a falling knife. The only time it's safe to take reversals is when you get a breakup structure. Other than that, I don't like taking reversals like that. How do you manage trade 2 pairs at the same time? I'll be in a profitable gold trade and see you post a GU signal and want to get in. You got to be disciplined, bro. You got to be disciplined. Just because I'm sending trades, I mean, you got to take it. You know what I'm saying? Like if you winning on gold, just stick with gold. What is your trading plan looking like? Are you trading 2 setups a day? How many trades are you taking a day? I only do like 1 and 2, 3 at the max. If I'm trading 3, that means I'm doing too much. But I really like 1 and 2 setups a day. Besides the trades that becoming invalid, other than that, 1 to 2 trades a day. That's just me. Some people like 3 to 4. Like it's just really up to you, bro. But you gotta, at the end of the day, you gotta have your risk management order. Don't be over risking, bro. Like you taking 5 setups, you risking 2% on each setup. That's 10% that you could possibly lose. That's not gonna work with a prop firm, bro. So you just gotta be careful, man. Don't take too many setups. If I'm taking 2 a day, how should I know what trades to not take? I mean, what you mean? What you mean trades to not take? You take the setup that you see. You know what I'm saying? Like you take the setup that you see. I don't really understand that question, bro. What is your thought process? Take your max L for the day, especially when the L is fast as hell early in the day. Yeah. When I lose like right before, like around like 8:30, like soon as I get to the market and I lose, um, I'm probably gonna take another setup. If I lose twice back to back, I'm definitely done. I'm definitely done. Most of my losing days are more than 4 trades. Yeah, you gotta shorten up those amount of trades you take a day. Uh, how does a great trading plan supposed to look like? I mean, time of day, set pairs, set strategy. Don't keep being too like keep the strategy simple. Either one style or maybe 2 styles. Other than that, keep it very simple. Pairs, time of day, and know what you want to risk each and every day. Other than that, that's really it. That's really it. Bro, I got a whole webinar on how to get a better RR, bro. Please rewatch that, bro. Please, bro. Like, you feel me? Please. Okay, so I do got to talk about I got 2 setups, the low probability setup versus the high probability. So I'm gonna take this off. I'm gonna take this off. And I'm gonna just take questions after that. But that really was it. People were like, bro, how do you understand the trend, the overall higher time frame trend, so I can be able to go in the same direction as the higher time frame? That's the main thing I got this week for sure. Okay, so let's look at these 2 setups. Let's take this off. Now, if you look at this setup, and then you look at this setup, we see which one just is better, honestly. I'm gonna be honest. This is a low probability setup, and this is a higher probability setup. The difference is one have a gap, the other one don't. Okay, one have a gap. I'm gonna answer questions right after I get through these 2 setups. Okay, just hold off, just real quick, bro, real quick, because people ask me, okay, what is the difference, bro? Because some people don't have a course and they still be like seeing the setup that some of y'all be taking and be like, bro, what was that? Like, it's like, okay, let's just go over it. Let's go over it. So this setup right here, this is a low probability setup. A low probability setup is a supply and demand setup that have no gap. Okay. There's a gap right here, but it's not attached to this green candle because it already wicked into it. This general area where they start pushing price, they came back into it. Now, when it comes to trading low probability setups, I recommend to have your stop loss above the zone every single time, because when it comes to trading the setups that don't have gaps, you're trading off of a general area. So if it's a general area, you want to have your stop loss above the zone no matter what. Now, when it comes to the high probability setups, go back, go over here. Now, when it comes to the high probability setups, if you look literally right here at that candle, they left the gap before they dropped. They never came into it until right there, then they dropped. I'm going to have my stop loss above this candle right here every single time. People was asking me, bro, how do you know where to put your stop loss at? After it taps into my zone and it break a candle, my stop loss is going above. So soon as it break this candle right here, my stop loss is going right here. every single time. It's going to be different variations, just like this one. Just like this one. As soon as it tap into my zone, I'm going to enter right here. My stop loss is going to be right there every single time. Every single time. Okay, let me go to that last example that I have. Okay, let's zoom out again. Now, let's look at this setup right here. No gap. They already tapped into it. It came back, and then they went up again. And then let's look at this setup. Now, this setup right here is gorgeous. I'm not going to lie. I don't trade this pair, but this setup right here is gorgeous. This is a demand that left the gap, played around all day, then came back to it, and then started pushing up. You see, this is the high probability setup, and then this is the low probability setup. This one don't have a gap. This one definitely have a gap. Okay. Would you wait that long? I would probably honestly no, unless I had an alert. That's the only time I would probably wait on something like this is an alert, because I'm not about to sit on charts all day. If I don't got no alert on that, it's over with. Would you take setups with multiple taps? Would you lower the risk? Yeah, I would lower the risk, but I have definitely taken trades that tapped in the zone already. Either I'm getting in late, or I see that it still want to go up and it haven't moved up as much. So yeah, I would definitely take trades that taps probably the second time. I don't know about the third time, but the second time, yeah, for sure. But definitely lower your risk when it taps in that second time with the higher probability setups. Take trades later in the day with an alert. I mean, yeah, I could do that. If the previous candle of the supply is red, you would not consider it a gap. What do you mean? You talking about this one right here? Are you talking about this candle right here? I think that's what you're talking about. I'm assuming you would take the one above instead. I mean, if I make the zone larger, it's still going to be the same thing. I may just do something like this, which I have done before, just to see if it's going to touch that zone and not touch the little zone. Other than that, it still was going to be the same results in the first place. Like the last example you showed, there is a gap. There is a gap, but the red closed the gap with the green, and the candle then shot up and left the gap. Yeah, I gotta unmute you, bro. No cap. I'm just not understanding what you're saying. With this setup, isn't the structure being broken to the downside? I mean, if you look at this is structure as well. That swing high got broken. This is another structure that's been broken, but I'm zooming out a little bit too far. But the main thing is this was a demand that was sitting at the bottom, and a broke structure broke this high and came all the way back. So this one is like, this one took a very long time, but this one definitely broke structure. But I wouldn't consider this a downtrend now, because if I zoom out, we're breaking up. Okay. Is there such thing as cutting your losses early on a one-on-one, or just let it hit your stop loss? Yeah, I'll be cutting my losses early. I got a whole webinar about that, cutting losses early. Go check it out. Go check it out. I don't know if you watched it, but go check it out. That demand is in the middle. What you talking about? What do you mean by the demand is in the middle? On the left leg. Okay, I'm about to unmute, bro, and then I'm gonna unmute you too. Okay. Let me go find him. Okay. No, I'm not understanding. What's your name? Young Hush or something? That's your name, Young Hush. I don't know. But yeah, I'm unmuting you, bro. Yes, bro, don't want to talk. Okay. Well, I'm about to unmute. Yeah, I'm about to unmute you since I guess bro don't want to talk. But don't be scared, bro. Don't be scared. We trying to get right.
Yeah,
Hello? What's going on?
I was talking about the demand that's on that same leg, but it's like 1, 2, 3 step. It's on that third swing low.
This one right here.
Not go up all the way up to like the middle, to the right side. Like you're going to the right, getting close to that New York session.
Oh, right here.
Yeah, like is that something more so that you will take, like getting up in the morning and looking at the market?
Yeah, I would probably take this. But you just gotta be aware that it's a demand that's sitting at the bottom as well. This one right here, I would probably take it. I'm not gonna lie. I would definitely take this, but I would understand that it's definitely a gap sitting right up under me. You just gotta be wary of that. Let me look at the EMA before. Yeah, I would probably take this. No cap. No cap. I would take that too. But I probably wouldn't hold though. I probably wouldn't hold. Because like we just sitting at the bottom. When it comes to the demand or supply, you want to be at the lowest point though. Like this one is ideal because nothing is up under me. But this one up here, we got gaps that's literally sitting up under me. So this is just way more ideal than this one right here, if that makes sense. That makes sense, bro. I guess he muted. Okay, you good? Okay. So do you lower your risk if you have higher time frame gaps above? No, 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 because sometimes it may not get up there. At the end of the day, I'm only taking my trades off the 5-minute chart. 1 hour gaps may not always get filled. Do you cut your losses early at stop loss or once it goes against you? When I see what was that trade? I think it was gold. But basically, where my stop loss is at, if it's moving in momentum against me, like especially like right at the entry, because it'd be a lot of bullshit when it comes to right there at the break of the candle, that first break. When it reverses and it's moving in momentum, I'm cutting that loss early without a doubt before I hit my stop loss. That's kind of like essential. Like it's so essential. Cut that loss early for sure. Some days I let it hit my stop loss. Like some days I'll just be like, you know what, whatever. I just accept the risk. But to cut your losses early is way better than just letting it hit your stop loss. No cap. No cap, bro. How quick do you move your stop loss to profit? Once it get close to my 1-to-1, or just like that trade, let me go to gold. Let me go to gold. Because after this day, I was done with gold. Let me go to it. Because I mean, we kind of all seen it that day when gold was reaching that supply. I knew like, okay, I need to move my stop loss. I need to move my stop loss. What day was that? What day that was? Yeah, this day right here. When I see that it was touching, when it touched this, I immediately moved my stop loss to break even because I saw that it was a supply right here. I don't know. We don't know if it's going to blast through or hold, but I'm going to be safe about it and move my stop loss. So I mean, like this is the setup that we took. And immediately, as soon as I saw this, I'm like, okay, this can definitely hold. And it literally held and dropped. So as soon as I saw that, I immediately moved my stop loss, break even trade, didn't make no money at all. Didn't make no money at all. Is GJ back in the game? I don't know, man. At this point, don't even listen. I don't know. Because I had AU on there. AU invalid my zone every single time. Gold, I'm good. So yo, Doyle, can you speak on high probability zones with multiple taps and whether it's something you encourage or whether you should stick to one? So I think gold did it again on Thursday. Yeah, it did it again. So this right here. It tapped into that zone. This is supply setup. It tapped to that zone, then it came back again and then dropped. Will I take this second drop? Yes and no. I just like the first tap, but I don't want people to not want to take it again if it comes again. Just lower your risk, bro. Just lower your risk. Me personally, I just like that first tap. That first tap, I just like everything to be robotic. It just, okay, first tap, break, tap, break. That's it. Like, But if it taps again, you could definitely take this second tap right here. You definitely can. You can take that second tap. Can you explain the EMAs a little bit more in depth on how you were able to determine if you would or would not have taken that trade by looking at the EMA? Okay. I'll go to the EMA. So I don't want to put too much emphasis on the EMA because that don't be a deal breaker for me. Because sometimes the EMA can make you lose because you're so afraid that this is a downtrend and then it reverses. So I don't really want to put too much emphasis on the EMAs. At the end of the day, the candlesticks are forming the EMA, if that makes sense. Can you say that this is also a triple top? No, not really, bro. Not really, bro. I'm not gonna cap, not really. Do you trade supply and demand all year round, or do we need to switch it up? I trade it year round. I ain't gonna lie. I trade it year round. So, I mean, summer months I don't know if it's gonna slow down or not. I don't know, but other than that, I'm trading supply and demand through the whole year. Now, I'm not gonna lie, last year around the holidays, we know how that went. So when it come to Christmas and Thanksgiving, bro, you gotta slow down that trading, slow it down. Slow that shit down, bro. Don't do it, bro. But yeah, when it comes to EMAs, I'm gonna answer a question, bro. When it comes to EMAs, man, the main thing that I'm really focusing on is where is the 200 EMA at? Because I'm telling you, when it cuts through the middle, it can go either way. We don't have a clear trend on the 5-minute. But then again, I don't want to put too much emphasis on the EMA because it can be consolidated on the 5-minute, but it also can be a downtrend on the 1 hour, and the EMA can be sitting at the top. All of them can be sitting at the top. So again, I don't want to put too much emphasis on the EMA, but I just definitely don't want the 200 EMA to be cutting through the middle of the candle. I don't want that. I don't want that. Can you do an example of cutting through the middle? Okay. Like stuff like this is what I like to see. It's uptrending very strong, 200 at the bottom, cool. But when I see stuff like this right here, I stay away from, no matter what pair it is. Stuff like this, no, sir. No, sir. It's cutting through the middle. They have no clear trend. And then we look at this. This is bullish for the day. That's a no. This is a no right here for me. I'm not touching it. I'm not touching it at all. And then, okay, so now look at this. Now let's take this off. Let's say we didn't take that demand. Would you have taken this supply? Because if you look, let's replay it. If you're looking at this, that's why I said the EMAs it can blind you, bro. That's why I just glance at it and I take it off. I glance at it and I take it off because if you see something like this, would you really take that sell on gold? No, you will not, because you think this is an uptrend. You won't take that. So when it comes to catching reversals, EMAs is not your best friend. I'm just gonna keep it a buck. They're gonna lag. They're gonna literally no, bro. All right, so don't be afraid to take a second or third zone tap, but just lower the risk. Yeah, especially a second tap. I would recommend a second tap over a third tap. I ain't gonna lie, but second tap for sure, for sure. I base everything off of TradingView. MT4 be looking nothing like TradingView. Everything off of TradingView. MT4 it be looking different. It be, bro, hell no. Candles be smaller. I be like, bro, what the hell going on? So I just base everything off of TradingView because MT4 is always looking completely different. But other than that, though, that's all I have as far as the questions people ask for. The risk management, go get Magic Keys, bro. It would change the way you trade. You would not go into trades not knowing how much you're going to risk. Because that's the main thing. Once you know that you're willing to lose 200, you can be able to walk away and be okay. Okay. It's just something as far as your mindset, as far as you knowing, okay, I'm actually risking 200 before I enter this trade. So when you get a break of the candle, you enter the trade. You know, if you lose, it's literally going to be $200 and you accept that risk. You can walk away from the chart. You don't have to be super emotional. You're only emotional because you don't know that how much you're going to lose. Once you understand how much you're going to lose before you get into the trade, you're a little less emotional. Okay. I just showed y'all the low probability setups and the high probability setups. We understand that low probability setups have no gaps. The high probability setups, they have gaps. Okay, we just talked about the minor structure and how I spot the trend, which is on the 1 hour. The 1 hour and 5 minute, they just work hand in hand, in my opinion. That's just what I love. So anybody got any last questions though? Any last questions? So I waste a lot of these swings of bread, bro. He a genius for making that. Shout out to Wicks Don't Lie. Can you briefly go over gaps? Okay, we can go over gaps real quick. Because at the end of the day, if you don't understand gaps, you won't be catching the setup that we be catching. So when it comes to gaps, take all these EMAs off. When it comes to gaps, all you're looking for is, well, the gaps are no price action to the right-hand side. Okay, let me say that again. We're looking at the body of the candle, Don't look at the wicks, the body of the candle, and look to the right-hand side of price. If you have no price action to the right-hand side of price and it taps into your zone, that will be a higher probability setup. So right here, the gap on that supply that people took, I didn't take this one, but the gap is from right here to right there. Let's fast forward. What do they just do? They're closing in that gap. So let's make that zone smaller. That's still the gap right there. What do they just do? They close the gap. There is no gap anymore. Once they fill in the gap, they're ready to reverse. They balance out the market, they're ready to reverse. So let's take this off, and we would literally be entering a trade on a break of that low right there. Boom, the rest is history. I'm gonna go through some more setups so people can just understand gaps. But at the end of the day, the gaps are just the deal breaker. You have to understand it. You have to. It's imperative. I ain't gonna lie. Let me find a good one. Okay, right here. The replay mode. Okay. So right here, if I'm looking at price right now, the gap is from here to there. Remember, we're looking to the right-hand side of price. There's no price action to the right-hand side of price. Fast forward, they start filling it in. We still have a little bit left. Right there, it's still never tapped into this supply. This is supply, by the way, with a breaker structure. That makes it even more better. You got a breaker structure and it's a high probability setup. They tap into it. They literally tapped into it. Let me zoom in so you can see it. They tapped into the zone and they filled in that gap. So since they tapped into it, we're taking the sale as soon as it break right there. Take the sale, that's the sale right here. Stop loss is literally right in the zone. And then we're just waiting for our 101. And then the rest is history after that. And it should start dropping like crazy. That's all we doing. But at the end of the day, if you're not looking at the body of the candle to the right-hand side of price, you're not going to be spotting this up. So you have to look at the body of the candle to the right-hand side of price. I'm gonna do it one more time. So we'll have to keep going over this, but I understand people just, you know what I'm saying? It's just taking people time, but once you get it, you can't unsee it. No cap. No cap. I'm trying to find one more. Yeah, I'm done with gold though. Y'all can keep gold. I'm good. I'm good, bro. y'all got it, bro. I'm good, bro. Okay, right here, boom. This is the last example that I'm gonna do. So let's look at this. This is a supply setup right here. Now let's zoom in. If I look at this candle right here, the gap is the bodies of the candle. Look to the right-hand side of price. So we have a gap right here to there. That little wick pull, it almost tapped the zone, but it kept dropping. And this setup also have a breaker structure with it as well. This is a low being broken. This is a low being broken. So this little supply setup also have a breakup structure. It's breaking that low. It taps back into it. Now with that green candle, it filled in the gap. It filled in that supply right there. It's still gaps above. Don't get me wrong. It's still gaps above. But for this supply right here, it definitely filled in that gap right there. So let's fast forward. Boom. That will be your sale right there. You're selling literally right here. You're selling right here. Stop loss is right here. And then the rest is history after that. And you can take all of that. But that's all it is, man. That's all it is. Just keep it super simple for people that still kind of like not understanding gaps. That's all it is, bro. Does it makes a difference if a gap are above and below? Yes, it does. Yes, it does. It does. I usually like when it comes to like the high probability with the gaps and all of that, it's more ideal when you're selling up here. It's more ideal when you're selling up here. Now, if you're selling and we kind of push down a little bit, I'm not saying be afraid, don't take these, but understand that if you lose, that just wasn't, the odds wasn't in your favor, bro. I'm not gonna lie. Like the chances of that winning were just not in your favor. Okay. Glad I joined. You keep trading some. Gotta keep it simple, man. You have to keep it simple, bro. I'm not overcomplicated. When it comes to the trend, I'm gonna say it one more time. I'm looking at the 1 hour. I'm glancing at the 4 hour. I'm glancing at the 4 hour. I'm not about to overcomplicate it. I base my trend off the 1 hour because I'm trading on the 5 minute. I'm scalping. I don't need to look at all the time frames. I'm not over analyzing this shit. I'm just not. Keep it super simple. I show up to the market at the same time every single day, 1 or 2 trades. It's going to be the higher probability supply and demand every single time. Do make any markups on the 4 hour? No, not really. No, not really. As far as doing like markups and supply. No. Only time I do a markup, let me go to the 4 hour. The only time I would draw something on the 4 hour is if we are at a supply and demand zone. Okay. Did that even tap? No, that didn't tap. But yeah, I want to, okay, this is something else too. This right here, this is a 4 hour demand right here. But look at the trend though. You feel what I'm saying? Some people be taking this stuff right here, but it never really broke this structure right here though. And we broke lows. So I wouldn't want to take a demand right here because we're still trending down. Once I see a structure being broken like up here, maybe I should take some buys. But other than that, like the trend is down. But other than that, man, that's all I have, bro. Ready for the merch. I mean, I don't really know what type of merch, bro. Feel me? I don't know. That's tough. But that's all I got today, man. I hope I cleared this up with the trend, bro. When it comes to the trend, just look at the 1 hour, bro. Just look at the 1 hour, glance at the 4 hour. Where are we at? Are we at some zones? Or if we're not at no zones, we just trading the 5 minute, bro. No cap. Yeah, no fact. I fuck with Pooty, man. Pooty is I fuck with him. IG Live was lit yesterday. Yeah, it was, bro. My fault on the audio, man. My phone be on some stupid shit. So when the trend, the overall trend is one way, you don't trade the other way unless I get a break of structure. That's the only time I'm taking reversals. If I get a break of structure, that's it. That's it. That's it, bro. If I'm taking reversals, break of structure, that's it, bro. Trying to catch the bottom of a downtrend is tough. Trying to catch the top of an uptrend is tough. We don't know. We don't know. If your 5 minute supply setup is close to a 4 hour support, would it put you off of taking a trade? Let me read that one more time. If your 5 minute supply is close to a 4 hour support, would you put off the trade? I probably would. Because most of the time, if we're reaching a support on the 4 hour and we're at a 5 minute supply, it probably already been on the downtrend on the 5 minutes. So we're probably at the bottom of that downtrend anyway. So it just really depends on how it looks. You don't mind to wait for a break of structure, then push, and it will not pull back into your zone or miss a setup. I'll just miss a setup. If it don't touch my zone, I'm missing the setup off rip. That stuff happened too. I think AU did that a few times. It don't touch the zone and then take off. Shit irritating. But I'm gonna get off of this though. Same thing every single time, bro. I'm taking the same trades. We taking the same trades. Monday, we taking the same type of setups, bro. I know y'all like gold. Y'all can keep gold, bro. I'm good. I'm about to take this off right now so everybody can see it. It's gone, bro. It's gone. I'm just looking at these, man. For real, bro. For real, man. But no, we back at it Monday, man. We back at it Monday. Homework Tuesday. You feel me? Same thing, man. Same thing. Let me know how y'all challenges going, man. I had like, I think 3 people this week pass their challenge. So that's what's up, bro. But people in the group need to pass their challenge. Like it's people that just trading this style, but they're not in the group. So it's like, I want to see people that's in the group getting funded, bro. But yeah, that's all I got, man. I'm about to get off of this, man. Y'all have a good weekend. I'll see y'all in the chat, man. Peace.